Good morning. Jobs Friday, the unemployment numbers, I'm not going to really go into detail. I'm just going to talk about how the S&P has come up to one of our targets, and that's 1510 in this bull run, and then gapping it up starting 2-1, with January being one of the greatest moves. And it was because the government came out with the resolution. We're 1510, we're right up here at the highs in our daily chart right here. This is the MMT platform. One of the things that I will tell people though, once again, every move up to the next resistance levels, meaning that, so two deltas, I already told everyone, we hit 1.5 delta at 1509. Two delta is going to be 1512 and 2.5 deltas. So we can trade up over time to 1520, as I've always said. Here is the daily bar and the highs that were up here. Now, that's in our platform and it's very strong, 1.79. The daily is a half a delta. Each line is $3.72 on the S&P here. And we can clearly see the big bull top. That's this diamond right up here at this resistance level. And we're finally up there. That's this diamond up there. That's where the close was. That's where the gap was. Now, let's take a look at the S&P 500. As I've always said, back to where the financial crisis eventually had started, we will blow up the tops over here so that this can be defined as to where 2008 downtrend started over here. And not only that, my friends, what we're looking for, even though the economic data isn't good, there's 1542 right up here. Then there's some areas, like I said, 1527. And in our system, we look at the standard charts, but we don't make our decisions on these. We do show them to our worldwide trader network, but nonetheless, the decisions do come from the market maker platform. So basically, when we look at this, we can clearly see what that upper end of this resistance is going to be, and that we hit 1511.42 on the high, and they opened it up with a gap at 15.01 on the S&P. And each one of these lines are 3.72 pennies, $3.72. Now, when we look back over here, we're going to see where the great bull is trying to regain itself right back in these tops, right in here. And this is where the S&P was when all the mess happened. Now, listen, there will be some pullbacks in markets, and we encourage you to get in because we could be breaking economically and a lot of other stuff. There's going to be some challenges, but who cares? The math is saying that we're trying to break the multi-year 12-year downtrend. That's the longer trend from year 2000. But from the 2007 highs and 2008 highs, we haven't got up there. We're about 40 handles away up there. That would put in a full distance double top. And at some point, all of your economic analysis done by your so-called talk shows and your stock shows and all of that kind of crap, who cares? I will tell you though that when we hit that upper end, when it comes, it'll be time to get out of that and look at where that S&P pullback would be. Most of their year-end targets for 2013, a lot of these analysts, we don't listen to them. I mean, we've been around 30 years. We know all the games. But listen, their targets are 1550 for year-end. We will have some good pullbacks, and the bond bubble, which bonds have been in a 30-year bull, is about to, they're trying to come to an end of that and put capital back into the equity side. Okay? So when you're going to break a multi-year downtrend going back several years, is that we are about to break that bear, and the only way that it'll be verified mathematically is when we do get the retracements and the pullbacks, is how they set up. and what is going to actually end up being the true channel ranges once we hit this upper end of the resistance levels on the S&P 500. Bull run, multi-year highs, S&P hitting up here at 1511. The Dow, it's up, and we'll take a look at the Dow. So let's do the Dow. The Dow is already up here. It's only 30 stocks, but we touched that 14,000 number today on the Dow. And we did. I think we did. 14,004.38. That's this 2008 right over here. We were up here. Let me draw the trend line for you on the Dow. And this is a major market update on a Friday on an options expiration. So I drew the trend line over here back in 2007. Now, when I come all the way over here, let's look at where that upper end of that trend line is. We're not far from hitting that. And that's going to be a major double top reversal back in those years. And you can see here where this Dow on all the dips and all the pullbacks and everything that's been happening with QE3, monetary policy around the world is printing money massively. And you never fight the Fed, and they're on hold. But nonetheless, just let me tell everyone, we're going to get overbought on the Dow. And when we reach that maximum overbought territory, we will have pullbacks like we always do. Just like over here we had a pullback, and just like over here we had a pullback. And we will have other pullbacks. And there will be the problems that people are going to have to deal with is they're going to have to deal with what? The fiscal cliff. So we had negative GDP. Today's jobs report, well, it wasn't that great. But nonetheless, people are looking forward, taking money, cheap rates, cheap money, taking money out of the bond bubble and moving it into equities is what's happened in 2013 here. And you see that's a major shift in the allocation. And what bodes well for equity price movements is bull. However, there will be some challenges because when the government has to cut back their spending, that's still going to show weakness across the board moving forward. And we won't know what those policies are going to be with the government. On the debt ceiling's been extended for 3 months, but still sequester is what they got to do. And when you pull stimuluses out, you grow at a much lower rate. We're at all-time highs in a very low growth environment. Nonetheless, the market is looking forward. There's money moving from one asset out of bonds into equities. We'll be tracking the mutual fund money flow and various other kinds of money flows that return to equity. So basically, QE3 is to move money around and to move it into the equity side, into markets. And they're going to be great tradable ranges. And we will have great pullbacks. Now, on the Nasdaq composite here, you can see that we're right up here on the Nasdaq composite. I'm going to draw you a trend line. Here it is, MMT. We're right there. Bingo. So we're approaching. The January is over. This is the first trading day of the month. 2/1 of 2013 at 8:39 a.m. Pacific Standard Time. Nasdaq Composite and its bull run right back with the financial crisis. We're going to hit major tops. Then we're going to take a look and see what the pullbacks would be. On the Nasdaq 100, this baby's got a ways to go. I mean, this thing here, back in the last bull run, it had already taken out its 2007 highs, and Apple was a big contributor to this move. And this NASDAQ 100 is not up there at its original 2012 highs, but technology led this NASDAQ 100 all the way up here. So basically, the NASDAQ 100, just like the S&P has 500 stocks, NASDAQ 100 has 100 stocks. And we have not yet, so far in this calendar month, in this calendar year, we've got major resistance over here at 27.97. And we're going to be watching exactly where this particular move will hit a wall of resistance. So, 2777.16 is right there. There's the last pullback. Here, every time we pull back, we rally up in here. And we're in the middle of the earnings season. This is a mid-morning update on all key indexes in bull rally mode. You got Dow Jones, you got the Nasdaq 100 we did the Nasdaq Composite, and here's your 1511 on the S&P 500. And we will be buying any kind of dips. The stocks had a farewell in a lower growth environment. Money will come out of other asset allocation classes into equity classes, and that's what we're seeing. And nonetheless, it's all tradable and investable. And for the day traders that have been washed out of the market for years, we'd love to see you come back. And as a matter of fact, here's what we'll tell you. We do care about you, so we would like to see you come back. And we have lots of things. Opening an account, click here, read about it. We're going to give you trading capital to trade with intraday now. And you won't have the pattern day trading rule for those people who have suffered with accounts under 25,000. We'll address that. We'll put you on a direct access platform, not this online discount brokerage crap, for order execution and routing orders directly to the floor. You have everything to gain. It's your time to come back and take advantage of these markets. And one of the things that we do, we have our stock alert service. Our market makers will give you the orders in the morning, and you'll utilize the buying power, the dollars that we give you to trade with. And we can do everything on a monthly level, and we have a yearly level placement. However, it's time for you to come back and get involved. So, and it'll be safe because we're in a bull run. Pullbacks will be buyable. Once again, I've concluded the major updates, and here as we speak, the S&P 500 is going to come up and hit some of our delta targets, all based on a jobs report that I feel wasn't that great, but it doesn't matter. What markets are doing is what they're doing, and you don't fight the Fed. They're going to have to pull stimuluses out at some time. Right now, worldwide, with Europe and everywhere else, everybody's on that print and press. It's starting to take, they started that QE3 in 2012. We're starting to see the effects of it. We're starting to see the asset allocation models change, and it's all the reason for you to be here.